phase 2 on how I'm improving my finances by simplifying something that can quite often be or seem complex and really overwhelming. Hi there, my name's Mariana. If you're new here, welcome. If you've been here before, welcome back. So 2 weeks ago, I uploaded a video about how I began the journey of improving my finances and taking something that I always thought was completely complex and over my head and breaking it down into small actionable steps that I could do quite easily and without too much stress. So if you haven't seen that video, I suggest that you go back and have a quick look at that one. And that way, some of what I talk about in this video will make a bit more sense. Quick caveat, I'm not a financial expert. I'm not a financial professional. I'm just taking my own experiences and sharing them with you in the hopes that it will help you and encourage you to get on top of your own finances. And the one thing that I hear most often is about how complex navigating your finances are, but honestly, they don't have to be. Do what I've done and break them down to make them as simple as you can. I mean, you can continue to go on thinking about how complex managing your finances is and just bury your head in the sand and continue on as you are, or you can face that head on and get control of your finances. And I know as soon as anyone says a budget tracking tool or an expense tracker app, you're like, it's so restrictive. It's actually not. That's what I always thought. And it was one of the biggest lies that I ever told myself because I didn't have clear visibility on my money. I didn't have any visibility about where it was going. And it just caused so much stress. And I found that using a budget and having at least an indication of where my money is going and when, it just reduces stress. Who wants to be waking up in the middle of the night worried about money? Like, it's just such a waste of energy when there are so many simple solutions that you can take to get control of your money. So hopefully since watching that last video 2 weeks ago, you have downloaded the budget tracking app and also an expense tracker, which is the app on your phone, and I'll link everything down below. I'm hoping you've also picked up a couple of really simple and easily to digest books so you can familiarize yourself with the basics of finances. So if you have downloaded the budget tracker and also the expense tracker and you've punched in all your numbers and you've also worked out what your emergency savings funds should be for either 1 month to get you started or 2 months or 3 months, and you've opened yourself a high interest savings account, and even if you've only put a couple of dollars in there. The other thing that I suggested you do in that last video was to figure out exactly what your debts were outside of your mortgage if you do have a mortgage like I do. So what I suggested was that you put in all your debts into the spreadsheet, and that included any credit card debts, any of the 50 months interest free, store cards, afterpays, all that sort of thing. And you've worked out what the interest rates on each of those cards are and where the biggest debt is. And you've established exactly what sort of method you're going to take to pay off that debt. So if it's the avalanche method or the snowball method that you've chosen, I recommend the avalanche method, whereby you pay off the highest interest rate debt first and then work your way down into the smaller ones. I know a lot of people would say if you do have multiple credit cards and they've got high interest rates on them, that you should shop around and find a low interest credit card, consolidate all that debt and put it on the one card. Look, it's not a bad idea. However, I don't know how many people I have seen that have done exactly that, and then they have left the other credit cards open and just continue to spend on them and then put themselves into further and further debt. So speak to your bank about doing things like that. And if you decide to go down that path and you do consolidate everything onto one low interest account, then cut up the other credit cards straight away. Cancel them straight away. Otherwise, the temptation, especially if you're a spender, will just be too strong. It's too easy. So if your goal is to pay off debt, keeping those credit cards open could potentially be the worst mistake that you'll ever make, because you're just going to continue to increase your debt. Now, I know a lot of industry experts will say don't even worry about your emergency fund until you pay off that debt first, which I don't disagree with. The reason I suggested opening up the high interest savings account and at least starting to put in a couple of dollars into an emergency fund and establishing your goal for that emergency fund is just to get you into the habit of actually depositing money. You should also consider having the auto direct payment straight into that account from your pay, whether that's weekly, fortnightly, or monthly. It just builds up a little bit of momentum, even if it's a couple of dollars. But I agree in the fact that paying off the debt should be your biggest concern at this stage. And I think by also having that emergency fund already set up, it will make you also consider other purchases. When that emergency fund, which may not have a lot of money in it at the moment or be nowhere near the savings goal that you need in an emergency fund, it will make you reconsider other purchases. Do you really need that second $7 cup of coffee? Do you really need that overpriced piece of cake? Do you really need to buy additional snacks and buy lunch out? Can you reduce those things to help you input a bit more money into that emergency fund? That's why I said to start it now, even before you've started paying off your debt, just to get you to think about it. And now, I'm not saying that you have to completely cut out coffee and cake. My favorite thing in the world is coffee and cake. But I went from buying coffee every day to reducing that to 2 or 3 times a week. And I can actually see the difference that it has made in my budget. But in my budget, I do maintain a separate line for coffee because I know it's something that I enjoy and I refuse to give it up. So by reducing it, having a line item in my budget, it just makes me aware of exactly how much I'm spending. Because quite often it's all those little things that are causing leakages in your budget, and you just think it's $6 here or $10 there, but it all adds up. And if you're putting that into an emergency fund, you can see it grow, and you can see how these little things have been and will continue to affect your savings if you don't start to make changes. For me, as somebody that doesn't have consumer debt as such, I don't have a car loan, I don't have any credit card debts and so on. My biggest expense is my home. And you can do this for your credit cards or whatever loans that you have, but I've done this for my own home loan. So I understood the basic mechanics of the way that my home loan worked. I'm on a redraw facility whereby if I've got, hypothetically, if I owe $200,000 on my home and I've got $50,000 in my savings account, then I'm only paying interest on $150,000. That was my basic understanding of my home loan. I also knew that I was paying $395 in a professional package, but I didn't have any idea what that entailed or if it was worth the $395 I was spending a year. So what I did next was I wrote down a bunch of questions, and I've got them here. So I'll read out the questions that I had. And what I did was I got on the phone, I called the bank because I wanted to get a really good understanding about how my home loan worked and how I could reduce my debt and pay off my home sooner. So I'm going to read from my list the questions that I wrote down before I called the bank. That way I had exactly in my mind what I wanted to ask and I wouldn't forget anything. So I'd suggest you do the same. Even if it's because you want to discuss your credit card, put together a couple of scenarios about how you can pay it off sooner, and also look at or consider negotiating with your bank if you can reduce the interest rate. They may say no, but they may very well say yes as well. And that will help you to achieve that paying off your credit card sooner. And once again, get that money-sucking vampire off your back, because no one needs that. So some of the questions that I had when I called the bank were, given that I've got the offset, so taking into consideration my current savings, how much is actually left on the loan? So if I were to take everything that I had in my savings account and put it onto the principal, what would be left on that home loan? And if I change the monthly repayments on the home loan to either weekly or fortnightly, how would that benefit me in the long term? How would it reduce the length of loan time? So when I rang the bank and they told me that if I put all my savings onto the principal, it would then reduce my weekly repayments. So my next question was, if it does reduce my weekly payments, but I decided to keep going with the payments I currently make, how would that affect the principal in the long term? How will it again reduce the amount of time on my home loan? So it's only 3 or 4 questions. Ask what the interest rate is. I also asked if there was any potential of reducing that interest rate as well. I mean, with the RBA making a couple of changes recently, it looks like the interest rates will be coming down. So it does put you in a really good position to renegotiate any debts that you do have, including your mortgage. And then I also asked about that $395 fee that I was paying every year. So some of the benefits that I got, and it may be different for everyone or anyone, but I get a slightly reduced interest rate on my home loan. I get a fee-free credit card. Mine also is an altitude card, so I still get points. I also get a discount on my home and contents insurance. So for me, that $395, when I sat down and ran the numbers, it was actually worth it. I know a lot of people say that they're not, but for me, it worked out really well. So my home and contents insurance was with them anyway, and it has been for a really long time. I did actually ring my insurance company to see if I could reduce the amount that I'm paying on my home, car, and contents insurance. And I'd already had discounts applied. And when I actually got online to do some additional insurance quotes, they still beat everybody else, and they're also quite a good underwriter. So that's another thing that you need to consider. So if you're trying to reduce debt, everyone will say get online and have your home contents, car, and any other insurances that you maintain and see if you can get cheaper quotes online. But I don't disagree with that. But you need to have a look at the levels of cover any new insurance company is offering, what limits may apply to the insurance policies that you're thinking of taking out. Also get online and have a look at the reviews that are being left in the event of a claim. I know there's lots of cheap insurance companies out there, but again, I stress the importance of it's all about how they perform in the event of a claim. So they're the things that you need to consider before changing your insurance over. I also discussed with a broker in my area that I do trust to requote my home contents and car insurances. He couldn't come back any less expensive than what I already had. So I've left that with my bank. I know it's underwritten by a good company. I know they've got pretty good reviews, so I'm happy to leave it right there. And as part of that package, I also get a fee-free savings account. So a lot of savings accounts, you have to deposit $2,000 a month in order for it to be fee-free, but I actually get it fee-free because of that package. Now, a lot of financial experts will say, don't have a credit card if you're in debt. And I really appreciate that. I still maintain a credit card. It's got a small limit on there. It is an altitude card, so I do get points on my card, and I quite often will use that for cash back if I've got enough points. And there's also a level of buyer protection and travel insurance when you've got a credit card as well. Now, in regards to the travel insurance, if you are going on a holiday and think that because you've got a credit card that the travel insurance will cover you for everything because you've purchased those tickets on a credit card, again, I'd encourage you to have a look at the wording, claims reviews, have a look at the limits on the policy, have a look at any deductibles and also any exclusions on the policies. Insurance policies are not meant to cover everything. There are exclusions and there are defined events listed on every single policy out there. If you don't understand your insurance, call a broker, call the insurance provider. And again, before you get on the phone, write down a bunch of questions. And I've actually heard people saying on YouTube actually that when they travel and they travel extensively, that they don't bother to take out a separate travel insurance policy because it comes with their credit card. I still purchase separate travel insurance when I travel, and I go through a reputable company and I get on the phone again and ask lots of questions and so on and so forth to make sure that I'm happy with the cover that I'm being provided. Okay, so far, insurances aside, I'm very passionate about insurances, but insurances aside, so they're the steps that I've taken because I've got a clear goal in mind that I want to pay my mortgage by the time that I'm 50. I couldn't just go on ignoring my finances as I was tracking because basically I was living paycheck to paycheck, and there is no way if I continue down that path that I'd be able to pay my home loan off in the next 3.5 years and also travel. So I had to get really serious about my finances. So that's it for today. That is as difficult as it needs to be for phase 2. So in phase 1, you read up some information on finances, you downloaded your budgeting tool, you've input all your data in there, you've got your expense tracker, and you've started tracking every single thing that you purchase. And then in this part of phase 2, you're going to write down your questions, you're going to call your bank, you're going to get a good understanding of the mechanics of your mortgage or any debts that you have, and see how you can establish a strategy on getting those debts paid as quickly as possible. You should also have your high interest savings account with a couple of dollars going in there every week. Have that automatically deducted from your pay into that high interest account. Now, for me, as I mentioned in the last video, I keep my emergency fund. I know exactly what it is. That sits in my offset account, so that money is helping reduce my interest repayments on my redraw facility. But I do maintain that separate high interest savings account for my holidays because of the dopamine effect, which I mentioned last time. So you should have all those little things in place. And then next week, I will go through how I'm improving my superannuation and getting myself retirement ready. And I also will talk a little bit about how I started my investment journey. Anyway, I hope you enjoyed this video and took something away from it that you'll find helpful. Remember, finances don't have to be complex. Break them down into small bite-sized chunks and get on top of it, especially for somebody like me who lives alone. I have to be completely self-sufficient. Like I said, no one's coming to hand me a big check or a big bucket of money and pay off my mortgage for me, as much as I would love that. I don't think that's going to happen. So I have to be on top of those finances in order to make sure that I reach my financial goals and become financially free by the time that I'm 50. Anyway, if you like this video, please hit that subscribe button. Give me a thumbs up, as it does help push my videos out to more amazing people like yourselves. If you've got any questions in regards to anything I've talked about in this video, or if you've got your own hints and tips on helping people to improve their finances, please drop me a comment. I would love to hear from you. I will take any advice that I can to make sure I've got this damn mortgage monkey off my back by the time that I'm 50. Anyway, that's it from me for today. Until the next one, I hope you all have a fabulous day. Bye.